All right, folks, ready to dive into Berkshire Hathaway's 2023 annual report.
Always a fascinating read.
Right. I mean, who doesn't love peeking behind the curtain of one of the most successful investment firms in the world?
I know, I do, especially this year.
Yeah, this year's report is really something. It's packed with insights into their performance, future plans.
Oh, absolutely, and how they're thinking about that mountain of cash they've accumulated.
Exactly. So that's what we're going to unpack today. The wins
The challenges.
and, what they might do with all that cash. For example, did you know Berkshire Hathaway is worth more than all the other companies in the S&P 500?
Combined.
Combined.
It's true. At the end of the year, their net worth was $561 billion,
Wow.
which is actually larger than the other 499
Wow.
in the S&P 500.
So what are they going to do? Just sit on all that cash?
Not quite. They've been actively buying back their own shares. It's a strategy they favor when they think the stock is undervalued.
Makes sense. If they think their company is the best investment, why not buy more? But they're also looking at opportunities outside America. Their investments in Japan caught my eye.
Yes, their strategy with the Japanese trading houses is intriguing. They've made significant investments, but they're also hedging against currency fluctuations
Oh, they're doing that.
by using yen-denominated bonds.
So no matter what happens with the exchange rate, they're covered. Pretty smart. But beyond the numbers, I was struck by Buffett's optimism about American business, especially when it comes to energy.
He's a big believer in American energy,
Oh, yeah.
particularly the shale revolution. He sees it as a game changer, lessening our dependence on foreign oil.
I like the optimism. It's good to remember that American businesses can adapt and innovate. But of course, not every sector is booming.
Yeah.
BNSF, their railway business, had a bit of a rough year.
Well, the railway industry is very capital intensive.
I imagine so.
BNSF needs constant investment to maintain and upgrade its network. They were hit with lower freight volumes and higher operating costs this year, which hurt their earnings.
So what's the plan there? More investment, or are they looking to change things up?
Buffett emphasizes that BNSF is a vital asset for the country and Berkshire Hathaway,
Okay.
and they are committed to its long-term success. But they're also focused on efficiency, making sure every dollar invested generates a good return.
That's classic Berkshire Hathaway. Now let's talk about their foundation, insurance. They had a record year, right?
They did. Insurance is the Old Testament religion at Berkshire Hathaway, as Buffett puts it.
I love that.
It's the core of their financial strength, providing them with a float.
A what?
Basically, a huge pool of money they can invest while waiting to pay out claims.
So it's a giant safety net that also generates profits.
Exactly.
That's brilliant.
It is. It's a unique aspect of their model. It's one of the reasons they can weather economic storms so well. They're prepared for the big, unexpected events, what Buffett calls the big one catastrophes.
Smart.
Yeah.
And they're not just sitting back. They're actively looking for new opportunities in the insurance space.
Correct. They see room for growth, especially in the property and casualty sector,
Makes sense.
which performed extremely well in 2023.
That kind of confidence is impressive.
It is.
Probably a big part of why investors are so drawn to Berkshire Hathaway.
I think so. They have a reputation for being prudent, well-managed, able to navigate uncertainty.
And let's not forget some of their classic holdings like Coke and AMX.
Long-term winners.
Those are long-term winners, right?
Absolutely. Both are expected to increase their dividends in 2024.
Okay.
And Berkshire Hathaway has no intention of selling.
Makes sense. Speaking of long-term thinking, I was intrigued by the mention of Omaha in the report. There's a unique connection between that city and Berkshire Hathaway's leadership, isn't there?
Oh, it's fascinating. Buffett, Charlie Munger, Greg Abel all have strong ties to Omaha. It's like this Midwestern city played a key role in shaping the company's destiny.
It's almost like a small-town success story, but on a global scale.
You could say,
Well, we've just scratched the surface of this report. Why don't we take a moment to gather our thoughts? And then we can dive into some of the specific challenges and opportunities that Berkshire Hathaway is facing in different sectors: energy, transportation, manufacturing.
sounds good. All right, so let's look at some of those challenges Berkshire Hathaway faced in 2023. We talked about BNSF's problems earlier,
Yeah.
but it's worth really getting into the railway industry.
Yeah, BNSF is such a big part of their portfolio. And it's facing some tough times
Right.
that are impacting not just Berkshire Hathaway, but the whole transportation sector. What are some of the big things going on?
Well, first, you got to remember how capital-intensive the railway industry is.
Yeah, I can imagine.
Think about BNSF's operations.
It's massive.
Thousands of miles of track, locomotives, freight cars, all needing constant maintenance and upgrades.
It's like having to maintain a highway.
Right. Yeah.
across the entire country.
Exactly.
And with inflation making materials and labor more expensive, that must be putting a lot of pressure on their budget.
It is. And then on top of that,
Okay.
they're dealing with lower freight volumes.
Okay.
Partly because of the slowdown in some parts of the economy. So you have rising costs and less revenue,
Double whammy.
which really squeezes profitability.
That makes sense. So what are they going to do? Just keep putting money into BNSF and hope for the best?
It's not just about throwing money at the problem.
Right.
Remember, Berkshire Hathaway is known for its disciplined approach
Right.
to capital allocation. Buffett is clear. BNSF is crucial
Okay.
for both the country and Berkshire Hathaway.
Okay.
But they're focused on making sure each investment is strategic, that it generates a return.
So it's about working smarter, not harder.
Exactly. They're looking at efficiency, how to make things run smoother, optimizing their network to move freight better. Plus, they're facing more competition from trucking,
Oh,
especially for shorter distances. It's
Yeah.
like that old battle between rail and road,
Yeah.
but with higher stakes now.
Yeah.
So BNSF needs to play to its strengths, moving heavy stuff
Okay.
over long distances. And they have to make sure they're competitive
Right.
on price and service. But they do have a natural advantage in terms of fuel efficiency and environmental impact, which is, increasingly important these days.
For sure. Speaking of the environment, let's talk about energy.
All right.
Specifically Berkshire Hathaway Energy. What's the outlook there?
Well, BHE is a bit of a mixed bag. On one hand, most of their electric utility businesses did as expected.
Aye.
These are usually stable businesses with consistent cash flow.
Mhm.
But the regulatory environment in some states, California, Hawaii,
Right.
is causing some uncertainty.
Yeah, those regulations can be tricky, especially for utilities because they have so much oversight.
Exactly. And the problem is, unpredictable regulations make it hard to know what earnings and asset values will be.
Right.
That's risky, even for a company like BHE.
So how are they dealing with this? Are they pulling back from those states or are they trying to change the rules?
It's a balancing act.
Yeah.
Pulling back means they'd miss out on potentially lucrative markets.
Right.
But fighting regulations is expensive and takes time.
Right.
Buffett doesn't give a specific plan, but he does say he's concerned about the impact of these regulations on BHE's profits.
So kind of a wait-and-see approach, but with caution.
Yeah, and maybe a focus on diversification.
Okay.
BHE has a variety of energy assets, including pipelines, renewables, and even a real estate brokerage.
Interesting.
Expanding into new areas could help, reduce the risks tied to one state or regulatory environment.
Spreading the risk. It's like a well-diversified investment portfolio, but on a massive scale.
Precisely. And speaking of diversification, we can't forget their insurance operations. Like we said, they had a huge year, record sales, float, and profits.
Yeah, insurance might not be as flashy as railways or energy, but it's driving Berkshire Hathaway's growth.
It is, and it all comes back to the float, that pool of money they get from premiums that they can invest while they're waiting to pay out claims, like a giant interest-free loan.
So it's not just profits from the insurance itself,
Right.
but also using that money to create even more value across everything they do.
Exactly. And what sets them apart is their discipline.
Okay.
They're not afraid to say no to bad risks,
Okay.
and they're always ready for the unexpected, the big one events
Yeah.
that could cause big losses.
It's like they're playing chess
Right.
while everyone else is playing checkers.
Yeah, they're thinking ahead,
Yeah.
anticipating risks, making sure they're positioned to handle anything.
That's a great analogy.
Yeah.
And it's that combination, the prudence, the discipline, the long-term thinking that makes them so attractive to investors.
It does. They have a reputation for being steady, reliable,
Right.
able to weather those economic storms better than most.
It's that security that's so appealing.
Right.
Especially these days.
It is.
Knowing your money's in the hands of people who are thinking long-term,
Yeah.
who are prepared,
Yeah.
that's powerful.
Yeah, it is. And it all goes back to Buffett's message. Berkshire Hathaway is built for the long haul.
Right.
They're not after quick profits.
Sure.
They're focused on lasting value for shareholders
Right.
and the American economy as a whole.
It's that long-term perspective that seems to be missing in so much of the business world these days. Everyone's so obsessed with the next quarter, the next earnings report.
You're right. It's refreshing to see a company willing to play the long game,
Yeah,
to make investments that might not pay off right away,
right.
but that will generate solid returns over time.
It's like they're planting trees knowing they might never sit in the shade,
Right.
but understanding that those trees will be valuable for generations.
That's a beautiful way to put it.
Yeah.
It gets at the core of their philosophy.
Yeah.
They're building a legacy.
Okay, so we've explored those challenges and
Yeah.
opportunities
Yeah.
in these key sectors.
We have.
But before we move on, what does all this mean for the average investor? What can we learn from Buffett and Berkshire Hathaway?
That's a great question.
I'm ready to soak up the wisdom.
Well, one big takeaway is patience and discipline.
Okay.
Berkshire Hathaway's success comes from smart investments and holding on to them.
Yeah.
It's the opposite of that get-rich-quick thinking we see so much. It is. Building wealth takes time.
Right.
There's no shortcuts.
Yeah.
It's about finding those solid companies with a track record and holding on,
Yeah.
even when things get rough.
So no meme stocks or risky bets.
Probably not the best way to go if you want long-term success.
Okay.
Focus on companies that make money consistently,
Yeah.
have a real advantage, and are run by people you trust.
Okay.
It might not be exciting, but it's more reliable.
Right. It's about the fundamentals,
Yes.
not the hype. But even with a good plan, it's easy to get emotional,
It is.
especially when the market goes up and down.
Absolutely.
Any tips on how to stay focused?
That's where discipline comes in. Remember that Buffett quote? Be fearful when others are greedy.
Oh, yeah, that's a good one.
It's about having the courage to go against the crowd, buy when everyone else is selling,
Yeah.
sell when everyone else is buying.
Easier said than done. But yeah, stay cool, stick to the plan.
Exactly. Investing's a marathon, not a sprint.
Yeah.
It's about making progress over time,
Right.
not home runs. If you get that mindset, you're on your way.
That's great advice. I should write that down.
Yeah.
Put it on my desk as a reminder.
We could all use that reminder.
Yeah, for sure.
But in the end, each investor needs to find what works for them.
Right.
Their goals, how much risk they're comfortable with, and their time horizon.
What works for Buffett might not work for everyone.
Exactly. It's about finding what you're comfortable with,
Yeah.
that you can stick to.
Okay, well, we've talked a lot today
We have.
about Berkshire Hathaway's performance, their strategy, and what we can learn from them.
We have.
But there's still some things we haven't covered,
Yes.
like Buffett's thoughts on share buybacks
Yes.
and their approach to Japan.
Right.
Should we get into those?
Let's do it.
All right, let's get back into Berkshire Hathaway's annual report and unpack some more of those interesting details. I definitely want to talk about Buffett's thoughts on share buybacks. It's a hot topic in the investing world these days.
Yeah, buybacks can be controversial.
Right.
Some argue companies should use their profits to invest in growth or their employees, not buy back stock.
So where does Buffett stand on this?
Well, he's pretty clear in the report. He lays out specific conditions where he thinks buybacks make sense.
So not just a blanket endorsement then?
Nope, not at all.
Yeah.
His main point is buybacks should only happen when a company's stock is trading below its real value.
Okay, yeah.
In other words, if the market's undervaluing the company,
Right.
then buying back shares can increase the value of the remaining ones.
It's like if you think your company's worth more than what people are saying,
Right.
buying back stock is a bargain for your own business.
Exactly. But Buffett also says buybacks at a premium above a company's real value are a bad idea.
He doesn't mince words, does he?
No, he even uses the word stupid to describe them.
Wow. Strong words from the Oracle of Omaha. But it's a good reminder, even the best investors can make mistakes. Got to stick to a plan, right? Resist those tempting short-term gains and focus on what builds value over time.
Couldn't agree more. And speaking of long-term, Berkshire Hathaway's approach to investing in Japan is a great example of that. We talked about it earlier, but it's worth another look. It's pretty unique.
Yeah, those investments in the Japanese trading companies are interesting. It's like they're playing 4D chess with currency risk and global markets all factored in. Can you explain it a little more?
Sure. They've built up stakes in 5 major Japanese trading companies.
Okay.
These companies are involved in a ton of industries, energy, food, materials, and they finance these investments partly with bonds in yen.
So they're borrowing in yen to invest in Japanese companies. That seems counterintuitive.
Well, it's a hedge against currency swings. If the yen weakens against the dollar, their investments become more valuable in dollar terms. At the same time, their debt, which is in yen, decreases in value.
It's like a built-in balancing act.
Exactly.
So they're betting on those Japanese companies doing well
Right.
and also making a calculated bet on how the yen will move.
Right. And it's worked out for them. The yen has weakened, which has boosted their returns on those investments. Shows how they think about risk, considering both the potential gains and the potential losses.
It's like they have a secret team of financial masterminds working behind the scenes. But beyond the specific investments, I think there's a bigger picture here. Berkshire Hathaway needs to adapt as it gets bigger and the world changes.
Absolutely. Buffett knows the challenges of managing a company of that size. It's harder to find acquisitions that make a real difference, and there's a lot of competition.
It's like trying to turn a giant ship. It takes a steady hand and a clear plan.
Exactly.
Sure.
And it needs a different approach than when they were smaller, more agile. They can't just rely on Buffett's stock picking anymore. They need systems in place to keep succeeding even as the company changes.
So what's the plan going forward? How will they adapt?
Well, Buffett doesn't give a step-by-step guide,
Okay.
but he does talk about some key priorities. Finding and developing talented managers is one. People who can lead the different parts of Berkshire Hathaway.
He's basically getting the next generation of leaders ready.
Yes, exactly. He's already chosen Greg Abel as his successor. Abel's overseeing all the non-insurance stuff right now.
Right.
Which shows how much Buffett trusts him.
It shows that Buffett's serious about making sure the company lasts,
Yeah,
that it thrives even after he's gone.
for sure. It's not just about who takes over.
Yeah.
It's about keeping that culture that made Berkshire Hathaway so successful.
And what is that culture exactly?
Well, it's a culture that values independence, trust, and long-term focus. They give their managers a lot of freedom, let them make decisions and run things.
Okay.
And they're committed to building value over the long term, not just chasing quick profits.
It's less like a company, more like a family. Everyone's working towards the same goals with the same values.
Exactly. And that builds loyalty. It's crucial for lasting success.
So we've talked a lot about Berkshire Hathaway, their performance, their investments, their challenges, their future plans. What's the big takeaway for our listeners? What should they remember from this whole deep dive?
I think the main lesson is building wealth, achieving financial success. It's a marathon, not a sprint. It's not about getting rich quick or chasing fads. It's about a solid plan, sticking to your principles, and being patient.
It's about the fundamentals.
Mm-hmm.
Find good companies and hold on to those investments.
Exactly. And keep learning, keep adapting as the world changes. Berkshire Hathaway is a perfect example of a company that's done just that. They've stayed successful for decades because they've stuck to their values while adapting to new challenges.
That's a great point to end on. Thanks for joining me on this deep dive into Berkshire Hathaway.
It's been a pleasure.
And to our listeners, keep learning, keep exploring, and keep investing in your own financial future. Until next time, happy investing.